Hello traders, the title of the video is how a swing trader follows position traders to maximize profits in a financial market. Alright, we are recording this video today because a YouTuber called Harry has asked a question, a specific question, an essential question, an excellent question about how a swing trader can follow a position trader, how swing traders profit from position traders. I would like to take this opportunity first to thank Harry for asking this essential question, and also to thank him for being a bit patient because he did ask the question for a while, but because I have a lot of video I was trying to push through, I promise Harry that I will answer that question. Today we will answer that question. All right. So thank you for your patience, Harry. And this is it. Let's begin. The explanation. How a swing trader can profit from position traders. All right. So in order to follow the position traders, the first thing that one needs to know is to understand how the position traders trade, or who are the position traders. So the first thing we want to know is who are the position traders. The position traders are hedge funds, the big financial institution. All right, those are the position traders. All right. The next thing that we want to know is how the position traders trade. All right, the position traders, they are both fundamental and technical traders. Usually, they are sophisticated market participants. So they usually combine the technical analysis with the fundamental. So we cannot talk about a serious or a competent position trader that is purely technical trader. Most position traders, hedge fund, banks, big financial institutions always combine the technical analysis and the fundamental. Usually they will start first checking the fundamentals before they will align the fundamental analysis with the technical analysis. So we want to understand that clearly. So now we know who are the position traders and what type of trader they are. They are sophisticated market participant that combines the technical analysis with the fundamental analysis. But the question is, I understand the question, all right, how do we profit from those position traders, all right? So we want to understand how they trade. So after they have analyzed the fundamentals, after they have checked the technical, how do the position traders trade? So in order for a swing trader to follow or to profit from the position trader, he or she must understand how those position traders trade. All right. So without too much blah blah blah, the position traders love the quarterly chart. So the number one time frame for the position trader is the quarterly chart. So once they find a fundamental reason combined with a technical reason, they will implement a top-down trading method from the quarterly chart. So they will use the quarterly chart for the trading setup. They will use the 3-day chart. All right, if you are using TC2000, you can see the 3-day chart for the signal, and they will use the 3-hour time frame for the entry. All right. So, but most charting software, do not have the 3-day chart or the 3-hour time frame. All right. But to be more accurate, the position trader love quarterly chart for the trading setup. All right. 3-day chart for the signal and a 3-hour time frame for the entry. This is how they implement their top-down trading method. Another time frame that the position traders are trading, they use the yearly chart. So they will use the yearly chart for the trading setup, the monthly chart for the signal, and the daily chart for the entry. All right. After they have identified a good reason, fundamentally speaking, and also a good reason, technically speaking, then they will implement a top-down trading method. I recommend to trader to watch the full length for this tutorial because I'm going to go a little bit deeper and deeper and deeper. So the two time frames that the position traders are using, okay, are the quarterly chart and the yearly chart. So we want to know how they trade, and they implement a top-down trading method. All right. The next thing that you want to understand in order to follow or profit from the position traders is you want to know the trading setup, technically speaking, all right, technically speaking, because fundamentally they will check the book value, whether the stock is oversold compared to its book value. I don't want to go into that, all right. So we want to understand the trading setup that they are trading, all right. The trading setup they are looking for, the position traders on the chart, or technically speaking, they are looking for, okay, candlestick pattern. So if you're on a quarterly chart and yearly chart, all right, and you see a valid candlestick pattern, you know that the position trader will be very, very interested to trade that, okay, a candlestick pattern on a quarterly chart and also on the yearly chart, all right? But they will never use the technical analysis alone. They will check first the fundamentals. So if the stock is bearish, okay, they check the fundamental. They know that the management is struggling, or the sector is becoming bearish, or the sector is now overbought and they want to sell. They will use a candlestick pattern. Same thing if the fundamentals are solid, or a sector is becoming bullish, or the S&P 500 is becoming bullish, all right, it's turning from bearish to bullish, and they want to buy, then, and they have a fundamental reason, they will look for bullish candlestick pattern. So the number one technical setup that the fundamental that the position traders are using is the candlestick pattern. All right. The next, technically speaking, the next trading setup that they are using is the surge in trading volume. I will go through it with you in a minute, okay? Because I have some example, good example here. I will show you, and I haven't finished yet. So, candlestick pattern, very important for those position traders on the quarterly chart and also on the yearly chart. The surge in trading volume, the volume spike. All right, so there are videos we posted already at 24 Stock Trader and also at Day Pro Trader talking about volume spike, and explain to trader how to use the volume spike. So they are using the volume spike as a trading setup on the yearly chart and also on the quarterly chart. They are looking for candlestick pattern. All right, and the third thing that they are looking for is the price structure. All right, the price structure. So those are the three specific, okay, trading setup, technically speaking, that the fundamental traders use. They use other, okay, Fibonacci, Elliott wave, and so on, but I don't want to expand this video too much, but just remember that they look for candlestick pattern, volume spike, all right, and also the price structure, all right. So once they identify those trading setup, after checking the fundamentals, okay, they align that technical trading setup with the fundamentals analysis, all right. Once they find those things, they will implement a top-down trading method. So you may say, Joe, tell me how a swing trader may follow them. So this is the key. Remember this. Understand this. The signal, so a swing trader must use, repeat, the swing trader must use the signal of the position traders as a trading setup. This is the key. So if, for instance, all right, you see a candlestick pattern on the quarterly chart, all right, and then you implement, you understand how the position trader will implement a top-down trading method, and the signal is fired for the position traders on the quarterly chart or on the yearly chart. So the trading setup is on a quarterly chart or yearly chart, and the corresponding trading signal time frame, the signal is fired. A swing trader will now use the position trader's signal as a trading setup. This is the key to follow and to profit from the position trader. So, for instance, here we are. You see here, we have a candlestick pattern. This is a bearish engulfment. So the price was going up, and then we see this long candlestick bar. Now, if Harry, understand that you already know how to trade a long volume, long, okay, candlestick bar. If you have been, I trust you that you know. So we highlight a high, okay, and the low of the long candlestick bar, and what are we looking for, and also the media line. Okay, you see, after that candlestick bar is closed on the quarterly chart, we know that it's a bearish engulfment on the quarterly chart. The position trader will be interested in that trade. Okay, so now we are looking for the next candlestick bar to open here and to rally into the media line. So here it is now, a rally into the media line, all right, into that zone. So you, as a swing trader, because you see that candlestick pattern on the quarterly chart, you know that the position trader will be interested to trade that pattern. Now that rally into that media line of that long candlestick bar, now you go to the signal time frame of the quarterly chart, which is the 3-day chart. Now, if you do not have the 3-day chart, position trader who do not have the 3-day chart will use the weekly chart. Position trader who do not have the 3-hour time frame for the entry, they use either 2-hour time frame or 4-hour time frame. So if you do not have the 3-day chart for the signal, use the weekly chart. So we will say quarterly chart, weekly chart, and 2-hour time frame or 4-hour time frame for the entry. So we can either use 2-hour time frame or 4-hour time frame for the entry. Most position traders use the 4-hour time frame for their entry. So the quarterly time frame, the signal will be on the weekly chart, and the entry will be on the 4-hour time frame. All right, but you can use also 2-hour time frame for the entry. So here we are on the quarterly chart. We know that the position trader use candlestick pattern, volume spike, and price structure. Now we see a trading setup for position traders. We know how to trade that candlestick pattern. Now he rally to the media line. We wait for the signal for the position trader. So we will go to the weekly chart at that point in time in that zone. If on the weekly chart there is a signal for the position traders near that media line, we will use that signal on the signal time frame here, 3-day chart or weekly chart, as our swing trading setup. So if we see the signal on the weekly chart, now for us as a swing trader, we want to follow and profit from those swing traders. We will now use the weekly chart as a trading setup, all right, 4-hour time frame or 2-hour time frame for the signal, and we'll use 15-minute time frame for the entry. This is one example how a swing trader may follow a position trader. But you have to understand, always, if you are a swing trader, you are following a position trader, you want to also perform a fundamental analysis and combine the fundamental analysis and the technical analysis, which means you can perform at least the Google Acid test. If you don't know what is Google Acid test, check out the video about Google Acid test by Joe Trio. You see a video about it, 2 of free video I've recorded about that, and you will use that. Use the signal of the position trader as your trading setup. And now, when you have to understand, now you break it down, weekly chart, all right, 2-hour time frame. So at the time when the position traders are entering their trade, that will constitute your signal, because they will be entering their trade either on the 4-hour time frame or 2-hour time frame. You will use that as your signal at that point in time, and then you go down to your corresponding 15-minute time frame to enter the trade. So weekly chart, 4-hour time frame or 2-hour time frame for the signal, and then you use your 50-minute time frame for the entry. All right. If this is happening on the yearly chart, all right, so you see a candlestick pattern or a volume spike, which is a trading setup for the position trader. You have to know how to trade those, all right? Very important, how to trade the volume spike, how to trade candlestick pattern, understand the candlestick pattern. You identify one on the yearly chart. Now, understand how the position trader will trade on the yearly chart, monthly chart, daily chart. So now you wait for that yearly chart, trading setup to generate a valid trading signal on the monthly chart. You, as a swing trader, you use the position trader signal as your trading setup. So now, because if the signal is fired on the monthly chart, for you as a swing trader, you say monthly chart, daily chart, hourly time frame. All right. And in all cases, remember that those position traders will always take into consideration the market environment and the fundamentals. So this is how the swing trader can follow a position trader. The key is to use the signal of the position traders as your swing trading setup. But understand, the three main trading setup that the position trader are looking for are candlestick pattern, surge in trading volume, and price structure. Talking about surge in trading volume, there was one here. I will show you that here. I don't want the video to be too long. I'll go over my time already, but okay, excellent question by Harry. Okay, one of okay, our subscriber. Okay, thank you so much. So here it is. You see this surge in trading volume. Yeah, now there was one before. Okay, I'll talk about that very. So let's talk about this one first. So you see this is a surge in trading volume above average trading volume. That candlestick bar must close on the quarterly chart. Then we know that it's set nicely. All right. So now we see this is a surge in trading volume. More than 170 million shares has been transacted in this stock. Biomarine, pharmaceutical, healthcare sector, biotechnology, okay, an American stock. So you see here, this is the first one here, is corresponding to this candlestick bar. All right. So what do? All right. So you see on a quarterly chart, they see a surge in trading volume, which means increase in trading volume, trading activity. If the price break below the low, it means that it's becoming bearish. All right. So you highlight the high, the low, and the median of that candlestick bar, and you are monitoring. So surge in trading volume, you just wait. Is the price going to give us a higher lows or a lower high? All right. So if the price, so here it is, we have a surge in trading volume. This candlestick bar is closed. Now the price is going below the low of the previous candlestick bar. What is it telling us? It's telling us that they are selling. Those are sellers. These people here, they are sellers. All right. So on the quarterly chart, we have that trading setup where you see a surge in trading volume. You just draw the line at the low, the high, and the median, and you're watching it. If it's going to be bullish, the signal will be a bullish signal, which means higher low, bullish chart pattern on the corresponding, okay, signal time frame. And here we have instead price going below the prior low, is telling us that, okay, we have instead a sell signal. When the signal is fired here, due to that surge in trading volume, you as a swing trader, you use it as a trading setup, and then you will follow with them, and you will be rewarded here. Here, the second one here, which is this one here, the price breaks above the red line. You see this red line at 1186, and it was retesting. So break above, you see here, break above and retest. Okay? What is going through your mind? And now you see a surge in trading volume. So the first thing that's going to go through your mind, you're going to say, you draw again a line, the high, the low, and the median line. Draw it and watch it. All right? Just be patient. All right? And here we have, okay, those are buyers. How do we know? Because this price that for me, you can be a little bit patient and wait. Price form another trading setup, a higher low, the first higher low above that low, and another bullish chart pattern, and so on and so on. If the signal is fired after that trading setup, you as a swing trader, you use that as your trade. You as a swing trader, you use the signal of the position traders as your trading setup. Okay. Talking about the price structure, here we have a head and shoulder chart pattern. I talk about this how to perform a technical analysis from different angles. Okay, if you remember that video, I was talking about how to improve a technical analysis from different angles, and I was analyzing biomarine pharmaceutical, and I was telling you that this stock has more chance to go down than to go up. But we have a triangle here. So the head is here, the triangle here is the left-hand side shoulder, and here we have the right-hand side shoulder, which is a triangle. This is a beautiful trading setup. So right now, the position traders are watching this price structure. All right. So for the triangle, which is here, anything is possible, yes or no. So if you form a higher low here, or give a bullish trading setup above the triangle, a higher low, or a bullish chart pattern above the triangle, it's a higher probability trading setup. If you dip below it and form a bearish chart pattern or a lower high, that's a high probability bearish trading setup. Right now, the position traders are watching this price structure. You, as a swing trader, okay, what do you need to do? Because they are on a quarterly chart, you know that the price is in a triangle. Okay, you see that, you say, what should I do now? Okay, go to their signal time frame, because you know that the position trader will be interested in this price structure. Now, or as a swing trader, you just go to their signal time frame. This is a 3-day chart. If you don't have 3-day chart, you go to the weekly chart and then monitor it and be patient, put it on your bullish or bearish watch list. And if the price show you a signal on the signal time frame for the position traders, now you as a swing trader, you use that as your trading setup, and then you implement a top-down trading method to trade it. Allow me to say one more time, in all cases, you will take into consideration the fundamental, because that's what the position traders will do. They do not trade, the technical analysis alone. The position trader also pay attention to the sector. That's very important for them. And the decisions that are made by the Federal Reserve, sometimes those trading setup are not technical trading setup, but they are more about fundamental setup. For instance, when the Federal Reserve start talking about stopping the quantitative easing, position traders understand that the market is more likely to go up in 2009. Then they will start looking at the chart, waiting for a clear-cut setup, and then they will combine the fundamental analysis with the technical analysis. But position traders are mainly fundamental traders, but they are sophisticated market participants because they know about Fibonacci. They use also Elliott wave pattern. They forecast the market, but they pay attention to the fundamental before anything else. But their main time frame, the two main time frame that the position traders are using are the quarterly chart and the yearly chart. All right. The position traders are long-term market participants. The swing traders are medium-term market participants. So as the signal is fired, the swing trader will use the position traders signal as a trading setup. So we are waiting for the signal for the position trader. Once the signal is clear and neat, a high probability trading setup is in place for those position traders. We as a swing trader, we use that signal now as our trading setup, waiting for our own signal on the signal time frame. Remember, the time frame that the position traders are using mainly quarterly chart and yearly chart. The setup they are looking for, technically speaking, candlestick pattern, very, very important on the quarterly chart and also on the yearly chart. They love the quarterly chart very much. They look for a surge in trade volume or volume spike, and also they use the price structure, Elliott wave and Fibonacci on those two time frames. But the key to follow the position trader is to use their signal as the swing trading setup and then implement a top-down trading method to trade it. All right. The position traders, one thing I need to tell you also very important is that the position traders do not buy or sell anywhere, anyhow. So when you are about to enter a trade and follow the position trader, try to buy or sell around key level at the hot spot trading zone and also on the edge. As always, all right, this is the knowledge. The next step is to now practice. So it's not going to be like you watch this video today and tomorrow you'll be able to start following or maximizing your profit in the financial market following the position today. So there is a bit of work, the learning curve, all right. So you may make some mistake, all right, blah 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 blah. That's the learning curve. Go through it, practice. Focus on it if you want to do it. Keep working on it. Try to polish it, all right, until you master it before going live. Though the video is quite clear and simple and straightforward, to put into use require more discipline and more experience. I'm speaking to new traders, all right. As always, all right, thank you for asking an essential question. Thank you for being also patient with me. As I promised, I'll record it. Now I record it, all right. And if you have any more questions, do not hesitate to put in the comment section, and I will keep the conversation going on YouTube, all right. If you have any question or suggestion, put in the comment section, and of course, I will be recording another video to answer your specific question. As I told traders, I always read all the comments and I note it down, and of course, I will record a video to answer your specific question. So if you are out there, you think that, Joe, you did not answer my question, remind me again in the comment section. Maybe if I forgot, I'll put it on my note. Sometimes I may not reply, I may not record a video to answer the question. I may go directly and answer the question in the comment section, but sometimes I may go and record another video, to answer your specific question. If you find this video truly useful, let us know by giving us the thumbs up. If you think that this is another blah 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 from George, all right, let us know by giving us the thumbs down, and that will put us under pressure to work harder for you. If you think this is an amazing tutorial, an essential tutorial, feel free to share it with your friend on Google+, on Twitter, and also on Facebook. This will conclude our discussion today, how a swing trader follows position traders to maximize profit in the financial markets. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about how a swing trader follows, how a swing trader follow position traders to maximize profit in the financial market. Happy trading to you all and speak to you soon.